the basic earning per share is the earnings per share which is computed based on the shares which are issued and fully paid by the company. And what we said is that whenever an entity is to compute these particular earnings, then we take first of all the profit or the earnings which is attributable to ordinary shareholders, shareholders of the company, and then we divide that with what we refer to as the weighted average number of ordinary shares, or what we abbreviated as WANOS. Now, still remember what we said in our previous class is that when computing this profit or the earnings attributable to ordinary shareholders, we are supposed to take now the company's profit after tax. We are supposed to take the company's profit after tax, or what in other terms we refer to as the net income, and then now to that we less the preference dividends. Remember, the preference dividends are also known as the preferred dividends, and the preference dividend which we less there should be the preference dividend or preferred dividend for the year. Now, what we get there then should be the earnings or the profit which is attributable to the ordinary shareholders of the company. That's we discussed in our previous class. Then, in terms of how we compute WANOS, or the weighted average number of shares, we say that this will be given by the number of ordinary shares which are issued and free paid as at the start of the year, and then to this we add the other shares issued in course of the year. So mean that we add shares issued in course of the year, of which we say that those shares issued in course of the year may be broadly classified into two: shares issued at full market price, and we say that these particular shares issued at full market price, they should be weighted on time basis for the period they will be outstanding during that year. And then number two, we say that we do have those shares which are deemed to be issued at nil consideration, and we say that these particular shares here, we don't weight them on time basis. We don't weight them on time basis, meaning that then for the purpose of computing WANOS, we take shares issued and fully paid at the start of the year, and then we then add the shares issued in course of the I think that we discussed, and basically we looked on an illustration in terms of how we compute fund.